Hello, everybody. Well, I guess Jerome is still talking. As widely expected, there was no rate change today. For reasons no one can divine, the market was strong all morning. They did their announcement. It remained strong, and then it barfed all over the place. So we've gone from completely green to completely red. It's not calamitous. We're down, and actually corrected just as of this moment. NQ is up 100%. In any case, the the ES and the RTOA are down some. We do have some red on the screen. Almost all I've got 28 different positions now. They're almost all going the right way, which is cool. It's always nice to get these Fed things out of the way. There's 8 per year. Would this be the 5th one? I guess. Maybe we're past most of them now. Of course, the next big event is going to be in about an hour. Microsoft and Meta report earnings, and then tomorrow Apple and Amazon. So 4 of the Mag 7, just over a 2-day period. So it's cool. We got a stock picker's market again, in my opinion. And shorting at lifetime highs is something almost no one's crazy enough to do, but I do it. And if I time it right, the prices are really good. So we'll see how that all works out. Let's jump in and look at the charts, shall we? That's what we do here. Here's the spider. For the first time in 12 years, I can say that no lifetime highs today. We had the intraday lifetime high yesterday. I guess the highest close was actually 3 days ago, but we got a nice down day yesterday, a nice down day today. Go in the right direction, my favorite color, so huzzah. The diamonds are also down. Here too, we had a lifetime high recently. That was on the 23rd. That was not just a lifetime high intraday, but a lifetime high close. And it has given that up. Plus, that minor resistance I mentioned again and again, we have broken it. We have busted below this line. We're going to honor that event by changing this to blue. This is a failed bullish breakout. It's not a big one. It's just a little bitty gap right here. But again, I will take it. Beggars, choosers, you know how that goes. SMH, the semiconductor index, this one, another lifetime high intraday, maybe a lifetime high close. This is like going to be this is the ultimo hombre, the last man standing, the most hoofy of all the sectors, thanks to Jensen Huang, who is quite solicitous of our new administration, and rightly so. But put it this way, if Nvidia ever starts to go down, then it's all over. I mean, that's the one linchpin holding everything up. If Nvidia starts to go down, forget about it. The bull market is utterly done. Nvidia is the market now. And thus, it's still holding things up a skosh. The bonds, TLT, are down by way of TLT. Same old, same old. The pattern is far from complete. Maybe it will complete one day. If it does, I think it's quite the BFD. As it is now, it's still working its way. This is a huge pattern. It's taken a long time. It's been hammering out this pattern for nearing 2 years now. But were it to slip lower, that would be interesting, because the bonds, unlike, say, equities, have been in a bear market for 5 years now. 5 years and 4 months. So that would be nice to say for equities, wouldn't it? The 5-year equity bear market, wouldn't that be cool? When will it stop? Zero is support. These words, these are not uttered. What else is cooking? CoreWeave. This is a nice example of how things are kind of burning up below Mr. Huang's world. CoreWeave has slipped from 187 to is barely hanging on to the triple digits now. We are a kitten's whisker away from the double digits on this. We are several dog whiskers away from a 50% drop in this bad boy over the course of just a month. Nice. Demolition Derby, baby. Here's DeFi development. And I'm only showing these not because these are like large important stocks, but just because it's showing how the rot underneath the surface is taking place in these formerly very hot issues. I mean, look at this. What are the colors we see? I'll read them for you. Red, 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 red. You don't see that in a young bull market. These white hot issues are getting just fricasseed. Oh, it's Trump. Here's DJT. This one's down just a little, about 1%. Its last verve kind of ended back in April. And I've got to say, it's sort of like the old saying about the frog in the pot of water. Slowly warmed up, slowly warmed up, slowly warmed up. It doesn't realize it's being boiled. It's weird to have a president with a public company. I mean, none of us did we have, Jimmy Carter's Homestyle Cooking Inc. or Gerald Ford Fashions or Millard Fillmore Industries. No, this is unprecedented. No pun intended. It's bizarre. And none of us really think it's bizarre because it's been just kind of slowly, we're the frogs. This is kind of slowly crept on us. It is just weird to be talking about this. But there it is, and so be it. Gold, not having a good day. We're down about 1.5%. As I've mentioned, this resistance up here was kind of a triple top. The last top being so limp that it didn't even manage to match the former tops, and so down it goes. I don't have any precious metals positions at all, except in as much as I've been short XME for some days now and continue to be. Silver, down even harder, about 3%. In fact, this is cut below this gap, so let's just put that behind the shed and shoot it. That gap's gone, and so the next gap down is like so. And as I've been saying about these, I said it like a week to 10 days ago, love my precious metals, God bless them, hope they do well. I'm highly confident a year from now they'll be much higher than they are, but this went too far too fast, and some selling is probably healthy for this stuff. Still talking about commodities, oil is up rather strongly. Here's USO. It is up 1.28% at the moment. And in contrast to that, weirdly, oil-related ETFs, which typically are lockstep with oil, they're going the other way, which I'm pleased with because I'm short XLE now. But here's XLE off almost 2%. That is bizarre. You get a 300 basis point spread between these directions. But nice clean stop there. I am short this, right? Yeah, am I? I've really lost track. But there's the stop, and it was not violated. And kind of like gold, we had a peak here, and then almost a peak here, not quite so high as the former one. So it's just, when you see that sort of thing, the whole point, it isn't just meant for conversation. The whole point of a push toward an important resistance point that falls well short simply points out the lack of energy in the move. And because if you got a line at 100, it hits 100, 100, 100, 100. That's a little scarier, because if it goes to 101, then all that pent up energy will get released. If you get 100, 99, 97, 93, the blood's not going where it should. So that's what's happening. XOP down even harder, 2.19%. And same statement on this one. It's I'm distracted because the market just keeps kind of melting down, which I always enjoy. But XOP is down over 2%, 2.37% now. A little bit of a sloppy pattern. If we're going to be school marms and give it a grade, it's kind of a B instead of an A because of the intrusion into that pattern. But it could still fall hard. For example, like I've got some individual shorts like Schlumberger SLB, which is down nicely, 4.5%, turning away from that rather better formed pattern and sinking away from that. So honestly, I don't know what Powell said or was expected to say, which is causing this, because everybody knew there'd be no change in the rate. He's not going to get spooked by Trump lumbering over, telling him that he should drop rates. I mean, he's not that kind of guy. But it was unchanged, and the market's digesting this in a way that I don't know. I don't know the reason for it. I was listening to the press conference. He didn't say anything that I would have wanted him to say, like, it's not the Fed's job to keep the stock market propped up. We're not going to do this anymore. Amen. He didn't say that. He just, did the same boilerplate about how we recognize it. It's almost like watching, a pharmaceutical commercial at the end, they have thousands of words fly up the screen with all their disclaimers. He does that every time when he goes to the podium. I mean, he probably knows it by heart now about how, this affects communities and blah, 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 blah. And yeah, thanks, JP. So where were we? Let's move on. A couple of other ETFs I'm short. XHB, the home builders. This is sinking about 2.5%, probably because rates are going up. The stop on this one's like so, and we've turned away from that. And XLB, the material selector, also down over 2%. This diamond pattern, as longer time viewers know, did not behave as cleanly as I would have preferred. Last I checked, the market doesn't care what I prefer, but it is at least turning away from these levels. So the patterns are kind of similar. What followed it, it's not true. Let's look at this. Here's the pattern, and here's how this behaved afterwards. So you get these jiggy-jaggy things going on outside of it, but it never was really your post-diamond sort of fall. So I don't know what the devil I'm talking about, because it's doing exactly what it did last time. So yeah, the analog actually still really works, except that it's not falling away like a diamond normally does. What this appears to be doing, XLB, is the price is behaving outside the bounds of that pattern, just like it did before. So there's that. Some shorts to talk about outside those I've already mentioned. Just a little Whitman sampler here. Apple, not a name I mentioned very much, but I shorted this yesterday. They have earnings tomorrow afternoon. That's not the reason I did this. The reason is because not only is the company kind of, its best days are behind it, I think. This is a high-tech company in the most overvalued tech equity market in human history that's fallen 20% in the past 7 months. That's lame. If you're a sailboat and have a strong breeze behind you and you're just like in the doldrums, something's wrong with you, or at least your sail. And that's what's happening with Apple. The company's in this extremely supportive environment, and they're losing. Added to which, there's only so many times you can upgrade this and get people to buy a new one. I bought the iPhone 1 and I've upgraded it from time to time. I'm kind of done. This is like 6 generations ago. This is a 10 instead of a 16, but it's good enough. I don't need 34 lenses on the back. And more people, I think, will be embracing that rather sensible point of view. And added as a chartist, the thing is that this line right here, this very long-term midline, goes back for a quarter century, has been broken, and we seem to be persistently beneath it. So that, since you asked, is why I'm short Apple. Peabody Energy, BTU, down again, almost 5%. FMC, down about 2%. And these simple markups I've done on the chart should make it clear why I'm bearish on these. JBHT, that is JB Hunt Transport, down about 2.33% under that very pretty, we'll give this one an A, very pretty reversal pattern. And then ConocoPhillips, another energy one, down 2%. And historically, a good performance following each of those rounded tops. I have 2 minutes left. That's unusual. Well, I'm not out of symbols, but we usually have to cram them at the end. So let's talk about a few other things. If my earnings data is correct, which I always say that because sometimes it's not, Carvana, I think, reports after today's after the close today. I think. Let's see what this says. Because after market hours, I've been in the financial data business since 1991, and now it's 2025. The data is not much cleaner than it was back then. So that's why I always have these sort of disclaimers. So, but I think they report afterwards. I've got a small short position on this. We'll see how that goes. The two biggies, though, I have no position in, but are much more important to watch. Meta is one. Meta has had an amazing run since late 2022. It has gone up hundreds and hundreds and hundreds of percent. 600, if you're, not to put too fine a point on it. I think that it's vulnerable to a sell-off at these levels. So we'll see. And the other one is Microsoft MSFT. a steadier performer. It's also had an extremely strong run. And obviously, I'd love to see them both down. Were I to choose, my dumb guess, and my dumb guesses have been right for a while, but my dumb guess is Meta will probably be weaker than Microsoft. We'll know in about an hour. But again, no positions, no really strong feelings about either of those. But they will certainly affect what the cubes do. The cubes were at their lifetime high on an intraday basis yesterday, at a lifetime high close 2 days ago. At the moment, we're just kind of trading where we were trading on Friday, so not a big deal. But this will be informed strongly by those 4 Mag 7 stocks today and tomorrow. And in the midst of all this, as I said yesterday, the VIX be real cheap. So insurance, taking an opportunity, a bearish side of things, is a lot more reasonable now than it was on, let's say April 7. So anyway, we are pure red right now, which is great. Just slam bam, and we'll see what happens next. But I hope you're doing all right, and the market's fun again. So I'll see you tomorrow. Bye bye.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.